On this episode, we're going to discuss the top 5 things I would be doing with my financing in this given unstable real estate and economy that we're in right now. So here are the top 5 things I would look at doing for when you're purchasing your investment properties, whether it's a short-term rental or you're looking for a DSCR loan. Here's some options. One is to look at a stabilized bridge loan. Stabilized bridge loan is basically getting up to a 24-month term with bridge financing, meaning there's no debt service coverage requirements. It's strictly a bridge loan based on the value of the property. If the property is seasoned, meaning ownership for greater than 4 months, with most of the lenders, you can use new appraised value. It's a good time to, instead of going into a DSCR loan and maybe getting a little bit higher rate right now and locking yourself in with a prepayment penalty, you might be better off going into a 2-year stabilized bridge loan. Okay, I talk about that a lot. And also, if it's a short-term, or it's going to be a short-term rental property, you can get 12 months of operating history and refinance out. Usually, historically, after every recession, rates get dropped again, right? So they're raising rates to slow the economy down, and at some point they're going to have to drop rates to stimulate the economy to get some movement in the positive direction. If you are doing a DSCR loan, maybe look at options where there's a 3-year prepayment penalty or less. Some lenders have, when they're priced with a standard 3-year prepay, others do a 5-year declining prepayment penalty, so know what your options are there. Another thing that would be a decent option to look at is a 5-year fixed with interest only, because you're going to get a little higher rate than you're expecting probably. If you go into IO, you'll still get the cash flow. It might be a great time to go into IO, at least for the next 5 years. The other thing I would recommend is credit lines, working capital, and HELOCs. If you have equity in property, start looking to put HELOCs on properties. Potentially even draw some out would be good, just to have that available capital, because if these cracks in the economy do break, there could be a big tightening in the lending marketplace, and I predict that there will be some cracks that break, which is going to cause these non-bank DSCR loans and bridge loans and fix-and-flip loans to really tighten their guidelines. So that's why right now I'm try to have zero debt other than mortgage liabilities, and working on putting HELOCs on any available asset that I can. Also getting unsecured lines of credit and unsecured term loans would be another option that you might want to look at doing. Really having cash available for opportunities that are going to present themselves over the next 12 to 24 months. Anyways, that's the top 5 things I would look at doing. Credit lines, working capital, HELOCs. STR loans, I would maybe look at doing a stabilized bridge deal for those acquisitions or refinances. If you're coming out of a deal where you fixed up the property and you're looking at DSCR pricing, maybe going into a stabilized 2-year bridge loan makes sense. Look at the 5-year IO options on your DSCR loans. And that's really the kind of realm of what I'm looking at doing. If you're looking at multifamily assets, they're look for something with a shorter prepayment penalty, nothing with yield maintenance, so it gives you the ability to refinance if rates come back down. For bridge financing, I think bridge right now for multifamily is okay. I think people that are coming out of bridge on their properties and looking for long-term debt might face some issues that are forthcoming. So anyways, hope you enjoyed this short episode, and we'll see you on the next one.
Hi, this is Beau Eckstein, host of the Investor Financing Podcast. Are you a real estate investor with properties and you're trying to figure out how to refinance or grow your existing real estate business? Need some clarity and a game plan for moving forward? I'm offering a free strategy call where we dive deep on your real estate investing goals. I'll help you come up with a strategic finance plan that will help you get to where you want to go. Whether you've got a portfolio of 30 properties or you're starting out with your first property, I have a framework that has helped many investors grow. If you're interested, book a call below in the Calendly link.